Welcome to FOB TV, the future of business. I'm your host, Kevin Benedict. I'm a futurist and lecturer here at TCS, and I want to thank all of you for joining the show today. Our guest, and I'm so excited to introduce her, is Marie-Clara Buelligen, Head of Sustainable Investment Banking Americas for Societe Generale Corporate and Investment Banking. So, Marie-Clara, thanks for joining us today.
Thanks for having me. Excited to be here.
So where are you calling in from today?
I'm calling in from New York, just outside of New York City. So
awesome. Well, what's the weather like today in New York?
It is perfect and sunny and just perfect summer. Not too hot, not too cold, just perfect.
Love it. So I'm here in Boise, Idaho today, 85 for a high, deep blue skies today. So this is what you would expect from August in Idaho. Anyway, thank you again for joining us today. We're going to be talking about some very fascinating topics around sustainability and regenerative environments and circular economies and all kinds of fun things as part of a series that we're doing in preparation for a big report that we're getting ready to issue and all kinds of fun things. So Marie-Clara, when you hear the word sustainability, what's that mean to you? What do you include in that bucket?
I include in that bucket a wide range, right? So private companies in particular, I see this more as a lens on how to operate. So if you have a profitable business today, how do you make sure that you continue to have that and then can take a range of meanings in a way, right? It means, how do you have sustainability integrated as part of your operational excellence? How do you think about the resiliency of your supply chain? How do you think about changing customer demands, changing regulatory environment, to really think about, your operating successful business in the economy as it is today, really thinking ahead on what will that economy look like in the future, what will the different supply chain challenges be, and really broaden the lens and think about it from that short-term, medium, and long-term horizon.
I love that example you just gave there, where you need to preserve, maintain, and sustain your economy so you have a place to do business.
Right.
And it's the same thing when we look at the world, right? We need a place where we can live and we can reside, and that's healthy for all of us, isn't it?
Exactly right. And as we sit here in the summer of 2025, you see obviously in the US, there seems, certainly at the federal level, walk back from some of the renewable energy targets and sustainability efforts. And of course, with ripple effects of the wider economy. But it happens also at the same time that we see, physical risk increasing, you see more and more extreme weather events, you see wildfires happening earlier and so forth. So it's really about that interplay, right? And this is while the transition, right, that it might be voluntary and there might be an aspect of choice to it. Certainly on the physical risk side, that it is not, right? We need to respond and react of the environment that we're operating in. And certainly for industries that depend heavily on the natural environment, think agriculture, think tourism, there you see already impacts, right? Where you see the cost of inputs going up because of droughts, because of more challenging production processes. So it's very much in that spirit, right, where it's not a nice to have, but very much critical to core business. And I think there's a substantial portion of the economy-wide overall that depends on nature, and some are more directly impacted, but there's certainly ripple effects throughout.
Before we jump into some of the deeper topics here, I just want to know a little bit more about you.
Yes.
Tell us about your journey into this area where you end up focused on this?
If you will, if you look at my career path, I started out my career as a lawyer in the public policy space. And that initial question that got me interested was, when you think back to the early 2000s, when just the launch of the Sustainable Development Goals, when you think about multilateral corporations that operate across jurisdiction and a lot of their supply chains being in countries where there's lower environmental standards, there's very limited labor protection and so forth, what is the incentive for those companies to do more than the absolute legal and regulatory minimum. And that is where the sustainability question comes in, right? And so I started out from there. I was really interested in the public policy side of this. When you think about renewable energy, when you think about some of the environmental considerations that surround, if you will, economic activity, how do you create that policy environment to support this, to create the right incentives, right? That you incorporate some of the negative externalities such as pollution into your business and financial planning. But then very quickly, and this was both, I was working in the US during the financial crisis, where I think we saw somewhat of a reassessment of what is the role, what is that interplay between the private and the public sector, and the public sector coming in those extreme moments. What is that responsive duty towards each other? But then shortly after that, working out of Japan and was there during the Fukushima nuclear crisis. And so for me, those two experiences really shaped my interest in what it was the public sector, creates the incentive, but where does the innovation needs to come from the private sector? And so that's when I switched over to the institutional investor side.
So what would a healthy relationship between humans and nature actually look like? Let's cover that, and then we'll jump into our interview.
Yes. So I think it's such an overused term in so many ways, right? Like, what does sustainability mean? But is it exactly that, really coming to that balance where we're using more resources than we have, for one, right? I mean, this is where we see some of the pushing against the natural boundaries, but also not using more resources than we absolutely need. And I think this is the other piece where a lot of our systems are set up with the assumption that we just have an excessive amount or an infinite amount of whatever input is needed. If we just take, energy consumption, it's a significant, one of the most significant sources of emissions across the world. But there's also no thriving economy without abundance of energy, if you will. And so that's the trade-off right there. How do you ensure that you have the economic growth and shared prosperity that you need, but also do it in a way that does not exceed the resources, if you will?
When you're talking to companies and corporations out there, what's their motivation? Where do they feel the pressure to change and, transform themselves?
So it's that wider lens again, right? As you say, we live in a shareholder-driven economy, right, where it's the company's responsibility to return profits to their shareholders, certainly for publicly listed companies, but also for private companies, to their investors. But it's, if I tie it back to, the financial crisis and COVID and other of those recent events that pretty much brought into focus that you also need to take into consideration the wider concerns of your stakeholders, and that can be any one of your employees, your customers, your suppliers, your regulators. It's really having that full view on what do they need, what do they want from you, and thinking about them comprehensively to, one, detect any unaddressed issues, any risk that you're not thinking about, so you avoid any of the large downside risk. But also, are you really maximizing profits? Are you really creating value in a sustainable way? This is where we think we talked about a moment ago, right? About those resilient supply chains, right? Like, are you really thinking about, your input costs, or can you anticipate that because of a changing climate, your input costs are going to rise? So what does that mean for your margins and so forth? And so that's very important right there. But also, as we saw through COVID, if your employees are not in working conditions and are not safe, that also means disruption. And of course, in addition to the health and concerns to the employees directly. And then same for customers, right? And this is really an interesting one, because if we think about a few years ago, there was this very clear assumption across the sustainable finance world that customers would want the more sustainable product, right? That they might be willing to pay more for it. But that is really not such a clear picture. So again, here is really understanding, what do your customers really want, right? And I think this polarized moment here in particular in the US, where sometimes customers want exactly the opposite from you, and how do you reconcile and this? But having additional pieces of information are really critical to really maximize your returns and do what you're meant to do at the core.
Now, TCS, where I work here and where I'm a futurist, we're motivated to help companies with science and technology and all these kinds of things. So one of the areas we're particularly interested in is how companies are using technology to understand the world, to understand climate change, to understand climate risk, all these kinds of things. How are you seeing technology like AI and digital twins and sensors and Internet of Things, all those things? How are you seeing those utilized out there?
Yeah. I'd say, the role of AI in particular with regards to understanding how sustainability creates value in terms of sustainability reporting, that has been, talked about for a while, but I think we're really seeing that as critical mass. And one element that I'm particularly excited about is, really aligning more the measurement of environmental impact and the mitigation and really tying to them. What do I mean by that? When we think about so much of the current sustainability data is backward looking, there's a lot of estimates, and of course we've come a long way, but there is a lot more to really make that decision useful. The more granular data we can get, the better. Of course, data costs money, and so I think this is really where AI and digital twins come in and filling in some of this gap. When we think about how do sustainability initiatives add value, how do they help prevent risk, it's either through incremental efficiency gains. When I think about digital twins, really thinking about, how can we, if we tweak that process here, how can we save energy? How can we save water? How can we optimize? When we think about some of the more systematic, right, we think about, sustainability on one hand can be through incremental initiatives, but also through the more transformational. And this is really when we think beyond an individual company's operations and how we make that more efficient, and both from a financial but also from an environmental perspective. If you think some of the more transformational changes, right, and really this is when we sit here today, this is really what we need to lean into as well. This is when we think more of the value chain ripple effect. Any one company can only do so much within their own operations. The emissions footprint, for any given company, the scope 1 in particular is fairly small, unless you're in a heavy producing industry. Scope 2, the direct purchased energy and energy consumption. There is, depending on where you are, an unknown decarbonization level that in many jurisdictions, switching to renewable is cost effective. But then when it comes to the value chain impact, here really you dependent on what are your suppliers doing and how do you, depending on how big you are, how really often that you can influence that. And here when we think about that reimagining, right, like it really requires thinking how dispersed actors would respond to different incentives. What is their willingness to pay for something more? Is it really enough of a differentiating factor to provide, an input that has sustainability features and so forth. So I think that has tremendous potential to leverage digital twins to map out entire value chains and see, if you tweak any one of those components, what are the ripple effects? How can you, is this a catalyst to reduce further emissions, or do you create unintended consequences and doing that at a cost that is much lower than if you were to, relocate, specific either production processes or change suppliers and so forth.
That the complexity around trying to model and to create simulations at a global level has traditionally or historically been so huge. The investment required would be so huge that nobody even knew where to start. Last year, NVIDIA started talking about creating this global digital twin to help everyone be able to better understand systemic impacts. And then just this week, even Google announced huge investment and platform for doing something similar, creating a digital twin of the entire globe and the impacts of carbon and all kinds of things. And I'm happy that AI, because of its popularity and in level of investment, has now funded two of those huge initiatives that will give individual companies for the first time a platform to at least participate in understanding that so much better. So I'm really excited about that kind of thing too. But in order for companies to make progress in their own, in what they do themselves and on a global level, they really need to have some kind of standards that they can hold themselves accountable. So there must be frameworks, methodologies, and various standards that companies can measure themselves against, so they know, how are we doing today when it comes to ESG issues and sustainability? How do we know if we're improving or taking steps in the right direction? What would you suggest? Where do they even start? How can they measure themselves and know if they're making a difference?
Yeah, so comparability is key, right? Standards are key to really both, measure yourself against some set target, but also, from a benchmarking perspective with the external companies and from an investor perspective to really get an understanding of the portfolio. But I think before we jump into any of the frameworks and what's the right one, I think we should really look at the sustainability reporting requirement as somewhat of a cautionary tale, where, of course, there's a lot that has been gained from the additional transparency and comparability. But it also meant that the sustainability teams, before focusing very often on kind of what's really core, and is it maybe not 15 metrics, but maybe 2 or 3, really put the disclosure, if you will, in front of the strategy, not the other way around. So really using this moment to think, really, what is the issue you're looking to solve for? What is the data that you have or don't have, right? What limitations are? How can you use any given model to solve some of those data concerns? Or do you need to solve the data before you can really delve into? And so really spending some good time, right, to not rush and think that we're just following the framework, and really spending some time on what am I actually looking to solve for, and what am I looking to get out of?
When we talk to multinational companies with extended supply chains that go around the world, one of the biggest challenges we hear about is actually having visibility into the practices of your tier 1, tier 2, tier 3 supply chains, because oftentimes you lose visibility at each layer there. And sometimes you can have very deep supply chains where there might be even 6 or 7 tiers down. Is there any solution for that? Is there any place to start where you want to have a supply chain that's not destroying the planet, that's not abusing, the youth in the country in which the supplier is, and having child labor issues? How do you make sure your extended supply chains live up to the standards that you yourself want to?
So it's like a Russian doll. They're all dependent on each other. There's certainly an aspect of capabilities, right? Like being able to track the data, at a reasonable cost, right? Who's going to absorb that cost? But one, again, unintended consequence that we're hearing more, certainly from companies that have high value inputs, is that there is also some competitive concerns, right? So in a way, if they give you their emissions intensity of X input, then you can reverse engineer almost on what goes into it, right? Mm-hmm. And so that's a piece there. It's almost like using a digital twin, for instance, in not only assessing what your supplier is doing, but again, like imagining the prototyping, if you want, like, what is it? What are the specs that I want to see throughout? And then you can go to your tier 1, tier 2, and 3 supplier and kind of turn it around, if you will, and really work on how do you get that data that you need without some of those sensitive competitiveness concerns that where suppliers might have the data, but they don't want to share it because it is real something about their competitive positioning.
I can certainly see that. So how do companies find a balance between being efficient and profitable and sustainable? What have you heard of strategies out there? Are they looking at percentage of income or revenue or earnings, or how do they do that?
Yeah. So what we see, is a lot of looking to measure the impact, right? Like how do you get an ROI on your investment, if you will, from a sustainability perspective? That can be, for instance, we talked about reducing water consumption for a lot of companies. Water it's a growing OpEx, right? As your company grows, so that your water consumption. But here thinking, when does it pay off? At what size? At what site does it pay off to invest in water recycling, either on site or to look at alternative water sources, right? So if you think about, a lot of local utilities, in addition to providing the fresh water, the drinking water, they also have, from some more industrial uses, reclaimed water using rainwater and so forth. So really measuring, how does it, is this cheaper? Is it more expensive? At what way? If it is more expensive, what's the margin that I can pass on to my customers? How can I segment my customer set to provide a more premium product to the ones that are willing to pay more for sustainability features, to the ones who are absolutely not, right? To the ones who are like, yeah, if it enhances the product, I'll prefer to buy it. I might not want to pay more for it, but I want to buy more of it, right? Which is great. But I think we're seeing this, certainly with some of the tech companies, that's seeing such a high demand for the AI services that they offer that, despite all the very aggressive emission reduction efforts across their value chain, they're still seeing their emissions go up, because it's, even though the emissions intensity of the individual product has reduced, the absolute number has increased, and so their emissions are going up as well. So it's really understanding all those different layers and saying who's willing to pay more for it, for what price, how do I deal with where my more sustainable product sells better, how do I deal with the emissions reductions from that, and then also think, how can you really lean into some of the competitive positioning, right? So, and I think this becomes more two of the more transformational changes, right? Like, how do you make sure that you are reading the science right? And I think this is where you can use some of the either digital twins or even AI, and saying, okay, when you think about all the different moving parts from a regulatory perspective, right? I'm just thinking about, what the biofuel standards in Europe versus a changing policy environment in the US versus increased supply in big agricultural areas like Brazil, in this very dynamic policy environment. How do you, come up and rethink, where is my competitive advantage? How do I really lean into this, and where might it be too soon or too big?
So how does a company know if they're being successful with their strategy? They have their obligations to their shareholders. They also want to do the right thing.
Yeah.
How do they know if they're winning or if they're succeeding? How do they do that?
Yeah. I would segment that into three pieces. Like, one is on the core financials, right? Like, are you meeting your targets? Are you meeting your earnings and so forth? So in that pure, financial metrics. The other piece is around how happy are your stakeholders with you, right? Like, you might be exceeding on the first piece, but if you're constantly in the news for this concern here or boycott here and so forth, eventually that can have some impact on the financial performance as well. So really making sure, there's a saying, you don't manage a crisis by managing a crisis, to really understand, how happy are your stakeholders. And this is, customers, we talked about, there's a wide range, they all don't want the same from you, same for you from your employees. Also thinking ahead of your regulators, where do you think this is going? And so, this is a very, very diverse and dynamic space, but that is another measure of success. And the other one is more on how sustainable are your operations? Are you able to do the first and the second by increasingly improving the operational excellence, the resilience of your supply chain, while limiting any negative or externalities? And I think this increasingly, there is an interconnection, all three of them, and the better you're able to manage that last piece, the less likely you are to have unhappy stakeholders, and the more likely you are to have continuous strong financial results.
I like to ask every guest that's on the show as a last question to put on their futurist hat and look ahead 10 years, where do you think the trends are pointing for how sustainability incorporate the global business community? Where are the trends pointing?
Yeah, I think it's a great question, and I think it's a very timely question for the sustainability space, right? Where I think there's a real question marks on where is this going. Right? I think we've seen tremendous momentum over the last few years, and certainly a cooling over the last 18 months and 6 months, last 6 months in particular. I do think that there is a sea change, if you will, on the recognition that nature and the economy are not separate, right? They are very much interlinked, right? And this, I think that is not going away, if you will. I think this is only going to get more pronounced, as we see, more resource scarcity, as we see individual commodity prices go up, if we see, more supply chain disruption. So I do think that we see, those companies that are continuing on that path, really investing in everything that we just talked about, beginning with the understanding how do sustainability initiatives create value, how they help manage risks. I think those ones that are continuing on that path, they will just be even further ahead and have an even deeper understanding on how nature impacts their business, how they can make the supply chains and value chains even more resilient. And so I think that just even strengthens their competitive positioning. So I think at the end of the day, that's what it's about. How do you strengthen your competitive positioning, that you deliver your financial results, you deliver for your stakeholders, and you do it with the minimal environmental impact.
Thank you so much for being on the program today, sharing your expertise and wisdom with all of us. Thank you.
Thank you. Pleasure being here.